Good morning and welcome back to the Daily Hunt for Multibaggers. It's Sunday, December 14th, 2025, and we're here to break down the latest market buzz we collected yesterday.
That's right, Ethan. Our AI has been busy sifting through a good number of posts, flagging two companies that generated significant discussion. We're seeing some pretty strong bullish sentiment out there for both, but also, some underlying data points that warrant a very close look.
Absolutely. Today, we're dissecting 1-800-Flowers.com and T-Mobile US. Both are generating a lot of chatter, and I'm really keen to dig into the growth stories behind them.
Let's start with 1-800-Flowers.com, ticker FLWS. Ethan, what's catching your eye in the community discussions?
Well, Brooke, the energy around FLWS is really about a classic, mechanical short squeeze setup. People are pointing to a massive 18.8 times imbalance, 9.4 million shares shorted versus only 500,000 available to borrow. That kind of dynamic can be explosive. Plus, the sentiment suggests it's deeply undervalued, trading at just 0.17 times sales for a $1.7 billion revenue company. It feels like it's priced for bankruptcy, but with new leadership and an AI-focused CIO, there's a real turnaround story building. It's an asymmetric risk-reward scenario, where the valuation acts as a floor and a squeeze could be the immediate catalyst.
I hear you, Ethan, and a short squeeze can be very exciting in the short term. However, when I look at the KPIs, a few major red flags pop up. The posts talk about insider accumulation, but our comprehensive data for the last 6 months shows the opposite, a massive net sale of over 4 million shares by insiders. That's a significant 27% of total insider shares held. Insiders selling off that heavily often tells a different story than community optimism,
That's certainly a strong point, Brooke.
Then we have the fundamentals. Revenue growth is negative at minus 11%. Net profit margin is deep in the red, and so is EPS. While new leadership and AI adoption could turn these around, those are future potentials, not current realities. The debt-to-equity ratio is also high at over 172%. This company is clearly facing serious challenges. We've never rated FLWS before, but looking at these numbers, the risks are just too high for a general investor.
So despite the short squeeze potential, you're saying...
Yes, my final verdict for FLWS is to stay away. The insider selling and weak fundamentals outweigh the speculative short-term squeeze narrative for me.
All right, that's a very cautious take. Let's move on to T-Mobile US, TMUS. Now this one, the community is really bullish, highlighting it as potentially the most oversold large-cap stock. It's consistently bouncing off its 150 SMA, indicating a technical rebound. Beyond that, you've got sustained subscriber growth, 5G leadership, and what people are calling material free cash flow tailwinds. There's even an aggressive $14.6 billion shareholder return program, including raised dividends. That's a strong growth and value play, if you ask me.
I agree there are some compelling points, Ethan. The new shareholder return program and Goldman Sachs maintaining a buy rating are definitely positive signals that could improve future EPS and the PE ratio. But again, my KPIs are showing some caution. The current price is very close to its 52-week low. While some might see that as oversold, it also signifies significant negative momentum. And unfortunately, we see that familiar red flag. Insider selling. Over 6 million net shares sold in the last 6 months. That's a hard fact to ignore when considering a valuation gap or oversold narrative.
Wow, that's a lot of insider selling for TMUS too.
Exactly. Furthermore, while the telecom sector often has high debt, TMUS's debt-to-equity ratio is over 200, which is substantial leverage that could create risks if growth doesn't meet expectations. Plus, there was news recently about T-Mobile quietly making drastic decisions after losing customers, which could potentially contradict the sustained subscriber growth narrative that's fueling some of the optimism. So, while the shareholder program is good news, the insider behavior and the customer retention concerns give me pause. TMUS has never been rated by us before.
So what's your final verdict on TMUS, Brooke?
Given the strong insider selling and high debt levels, my verdict for TMUS is to stay away. The positives are there, but the risks are too pronounced.
All right, a couple of cautious calls today. Let's wrap up our hunt for multibaggers and present our compiled list for deeper analysis. Investigate as buy. None. Investigate as cautious buy. None. Investigate as speculative gamble. 1-800-Flowers.com Inc. FLWS.
And that brings us to the end of another episode of the Daily Hunt for Multibaggers.
Remember, this podcast is for informational and entertainment purposes only. The content is generated by artificial intelligence and does not constitute financial advice.
Listeners should conduct their own research or consult a licensed financial advisor before making investment decisions. We are not responsible for any losses incurred. The market is a wild place, and knowledge is your best asset.
Absolutely. Thanks for joining us today, and we'll be back tomorrow with more insights. Happy hunting.